Welcome to the GSMC Financial News Podcast, the show that delves into the ups and downs of the stock market, changes in the economy, and news from the worlds of real estate and technology. From breaking news on the New York Stock Exchange, NASDAQ, or the overseas market, to updates on the bond market, if there's money to be made, we've got you covered.
Hi there, I'm your host, Paula DuPont, and we're talking business news. Today we're going to talk about the latest in unemployment figures and also how some industries are reconfiguring their workforces in order to deal with the coronavirus. We're going to talk about the airline industry and the recent discussions held over the last weekend with the federal government about how the stimulus package aid will be applied to the airline industry, how they'll take advantage of that and what the terms are. We're going to talk about the latest in the markets. A lot of the results right now are being felt from March earning calls and actually quarter end calls that companies are having. And spoiler alert, it's not great news. We're also going to talk about the technology that we're needing to do business at home and basically to survive during this pandemic. Of course, at this point, you already have that technology, but we're going to talk a little bit more about that. We're going to talk about Amazon and some other things as well. So please stay tuned. So on Thursday morning, April 16th, the latest job figures came out for the previous week. The number of people filing for unemployment climbed by another 5.2 million last week. This brings the total for the past 3 weeks to about 22 million who have filed for unemployment. Now, to put this in perspective, and I guess what makes this so, one of the things that makes this so devastating is these figures basically undo what the job growth rate was for the past 10 years since we had what was considered the last big recession. So, not great news. Actually, it was the number that filed last week was down from the previous week, which was 6.6 million who had filed, and that was at the end of the week, April 4th. So this is according to the Labor Department, by the way, U.S. Labor Department. One of the factors that also contributes to this lovely picture is the fact that this is just for March and early April. So we still have all of April's impact to be felt. And there is thought and expectation that there will be more job losses in this month, though we're half through. So picture's not looking great. Where initially we were seeing a lot of restaurant workers, retail workers, and others who lost their jobs, we're now shifting into other jobs that previously had been considered safe jobs or relatively safe. One economist has predicted that the April unemployment rate is likely to show a loss of 3.4 million jobs in business services, including architects, lawyers, consultants, and advertising professionals, just to give some examples. Despite all this, there are companies that have been able to continue keeping their employees on the payroll thanks to the stimulus package and the payroll protection program that's aimed at providing money to small businesses and larger businesses and industries to help in that way. Also, you do have some companies like CVS and Amazon and others who are actually hiring. And a lot of that, of course, is driven by the heightened demand through the coronavirus pandemic. But some of the companies, like, for instance, CVS has been turning to other industries where employees have been furloughed and laid off and trying to draw them in because they were looking to hire about 50,000 new employees. CVS has partnered with The Gap, Hilton Worldwide Holdings, Delta Airlines, and some other companies who've laid off workers. So far, more than 900,000 people have applied for the CVS jobs in just the last few weeks. Now, of course, they're not going to be flying planes or stacking jeans on shelves, but they are doing things like answering phones at call centers or stepping in for staff who are sick or quarantined, working in warehouses and stores, a number of roles that are needed to keep the chain going. So, for some people, this is a viable alternative. They may even feel some sense of pride to be able to help out in a time when, there's such a great demand for some of these essential items that places like CVS sell. So that's a pretty good thing. The supermarket chain Kroger company has done something similar, where they have created an exchange to bring on workers who've been furloughed or laid off from food service and hospitality companies such as Sodexo, Cisco, and Marriott International. In Germany, the grocer Aldi has signed an agreement with McDonald's Corporation, allowing them to refer employees for temporary roles at their stores. So it's obviously not just happening in the United States, but throughout the world. Another way that businesses are dealing with shifting workforces is in doing exactly that, shifting their workforces who may be doing something that might ordinarily be related to sales or something that clearly is being affected by the pandemic, and taking those workers and putting them in a different role so that they can be more hands-on in support. An example of that is TD Bank. More than 2,000 employees have switched to new jobs temporarily. Mostly they're handling customer service calls. The customer service calls may mean answering their questions about financial relief, how they can defer mortgage or credit card payments, and even handling some of the employees' COVID concerns and being able to address them. Verizon is another company that's doing something like that. They've had to close about 70% of their corporate-owned retail locations back in March, and many of the store employees who did not have a place to work were then becoming available to take customer calls from home. So they were able to redirect calls that employees working from home could then answer a lot of the kinds of questions that they might have coming into the store, or perhaps in general about their cell phones. We're going to pause for a brief commercial, and after that we're going to talk about the markets and what's been happening in retail and industrial sectors, particularly after some March results.
As we go into the break, I want to talk to you about Birch Gold Group. In 2008, as we were just mentioning, the U.S. national debt was $10 trillion. Today, it's over $23 trillion, and it's rising like a hockey stick. If you don't think we're sitting on a house of cards, you're living with your head in the sand. But since you're listening to this podcast, you are clearly intelligent and smarter maybe than the average American. So what is your plan? As one of the dealers of physical precious metals in the United States, Birch Gold Group helps Americans diversify their savings with gold and silver. Customers can purchase for physical possession or convert a portion of their IRA or 401k into an IRA backed by physical precious metals. Can you afford another hit to your retirement like the last downturn when the S&P dropped 50%? You can hedge against inflation and hedge against uncertainty and instability with precious metals. Gold is a safe haven against uncertainty. Thanks to a little-known IRS tax law, you can even now move your IRA and eligible 401k into an IRA backed by physical gold and silver. It's perfect for those who want to protect their hard-earned retirement savings from any future geopolitical uncertainty. If you look back historically, when the bottom falls out of everything, gold tends to safeguard savings. So if this is something that you are interested in pursuing, you can contact Birch Gold Group to request a free info kit on physical precious metals. See if diversifying into gold and silver makes sense for you. This comprehensive 20-page kit reveals how gold and silver can protect your savings and how you can legally move your IRA or 401k out of risky stocks and bonds and into a precious metals IRA. To get your no-cost, no-obligation kit, go to birchgold.com/finance. That's BIRCH gold.com/finance. Are you a business owner? Someone interested in the latest news that might affect your business? Then check out the GSMC Business News Podcast, a show dedicated to keeping you up to date on all things concerning business, technology, and the stock market. Get a head start on the day as we keep you updated on the latest goings-on Wall Street, money, jobs, and technology. The GSMC Business News Podcast has you covered.
Hi, I'm back. And as I mentioned, we're going to talk a little bit about the markets and what's been happening there. And of course, any moment that I would record this and then you would listen to it, things have probably changed a lot. However, I think overall, in terms of what we've been seeing lately is, particularly this week, now that we're in mid-April, we're seeing a lot of earnings calls coming out where the companies are having to say that they didn't make their projections, the earnings are down, and so likewise the market is reacting to that, generally speaking. There have been other reports that have come out as well that aren't too promising either. One of them about retail sales plunging by 8.7%. Which is a pretty large decline. That retail sales is a measure of purchases at stores, gasoline stations, restaurants, bars, and online. That number reflects a drop from February's sales figures. And again, to put it in perspective, this is the biggest month-to-month decline since 1992, and that's when they started tracking the sales index. Sales at clothing stores plunged by more than 50%, while spending on autos, furniture, electronics, and sporting goods fell by double digits. In related statistics, the Federal Reserve said that U.S. industrial production which is a measure of factory, utility, and mining output, includes oil and natural gas production, which we know has been sharply down, fell a seasonally adjusted 5.4% in March, and that is its biggest monthly drop since 1946. U.S. economic activity was described as contracted sharply and abruptly throughout the country as a result of the pandemic, resulting in lost jobs and lower wages, which we've discussed here many times in this podcast. Speaking of which, I only started doing the Business News podcast just recently. And like they say, timing is everything. How is it that with all of the great advancements that have been going on in this country and how well the economy was doing for quite a while, and the markets, that, of course, I start having to report and talk about this kind of business news in the midst of a pandemic. So I can hope that it only gets better from here, right? But the news is the news, and again, this is, many experts are saying about that not only, were these results pretty dismal, but it's probably not going to look a whole lot better when we get April's results in another month. And in the Wall Street Journal article that I'd seen, it said that a number of retail categories were hit hard in March, including sales of furniture, electronics stores, restaurants and bars. Specifically, they saw a drop 26.5% from February. That's, of course, because of the establishments closing with the stay-at-home orders. Sales at clothing stores fell 50.5%, and motor vehicle sales decreased 25.6% from the prior month. And while those areas were very much impacted, there were some retail categories that did post gains in March. People stockpiled food and increased their outlays in building materials, and so they spent more at health and personal care stores. Sales at non-store retailers, a category that includes internet merchants like Amazon, rose 3.1%. Grocery sales jumped 26.9%. I think we can all testify to that since that's pretty much all we can buy right now. Sales at Walmart's 4,700 U.S. stores rose nearly 20% in March. And that is seen because of the fact that they are considered having essential items. And so likely toilet paper and cleaning supplies and other supplies needed, to support healthcare would attribute to that increase in sales. And it would seem that they have also benefited from the fact of being an actual brick and mortar store. So I'm not sure what their online sales have been. I believe in a couple weeks ago I reported that they were seeing a jump also on their online sales. But again, I think the fact that they're still a store, a physical location, has probably helped them. As has with Target. Target also saw their March sales from their stores and their digital channels in the U.S. climbed more than 20% towards the end of March. So that is a comparison from last year at that time. So not just a jump from the previous month, but in looking at the same period of time last year. The sales of household essentials, food, and beverages rose more than 50%, while sales of apparel and accessories declined more than 20%. So I think that follows the overall trends that we've seen in terms of food sales versus clothing sales, as we mentioned earlier. It seems it's not certain that this trend will continue, even though we're still in quarantine, and when they look back at April numbers across the board, because now that we're coming hopefully coming more to the end of this crisis, and states and businesses are looking at how they're going to reopen. And nobody's thrown a date out there yet because, of course, that's contingent on a lot of other factors that are still being looked at. But nonetheless, you find that people are a little nervous about going out into stores, maybe more so now than they were initially when we thought it was okay, and that was before we had to wear face masks. We were just told to wash our hands a lot, but now there's so many more considerations when you go out into a public place that it may be that trends will show that people aren't going to be doing that as much. In fact, some have said that discretionary spending in general will likely still be conservative as we move forward for a lot of factors. The current economy in general would be a reason for that, but also people losing their jobs, and then also not certain as to when they will be able to get out again. So we're going to take another brief commercial break, and when we come back, we're going to talk about markets in other countries, specifically as they are coming back to work, and what some of their early results are showing as they do that. So be back in a minute.
Do you work in the world of marketing and advertising? Are you a media buyer or the owner of an agency? Have you been looking for a podcast to help stay on top of all the goings on of those worlds? The GSMC Marketing News Podcast is dedicated to keeping you up to date on all things concerning marketing and advertising. Get the latest marketing news, from what major businesses have planned for the coming year to the newest trends in advertising, from podcasts, digital and streaming, to the old standbys of radio, television, and billboards. The GSMC Marketing News Podcast has you covered, whether you're a marketing agent or a business trying to expand your brand.
Hi, I'm back, and as I mentioned, we're going to continue talking about the economy, at least in terms a little bit about the how the market is responding to these latest reports that have come out, and then also about how our country is closely watching, of course, what's happening in other economies where they're restarting, such as in China and in some limited places in Europe. Now, when we talk about the market, depending on what time you listen to this podcast, things could have changed very much since this was recorded. But as of Thursday, April 16th in the morning, the stock futures had risen and European markets inched higher as investors braced for new government and corporate figures to further detail the economic damage from the coronavirus outbreak. Those are some of the reports that we just talked about, the unemployment rates, the latest unemployment figures, the sales and manufacturing results from for the first quarter that were reported, and also last month's sales. On Wednesday, April 15th, the S&P 500 tumbled more than 2% as investors were looking at some of the data that was already being released around the economic damage, and also a factor being retail sales, and already having a sense that that would not be great. So just to give a wider perspective on this, that although the market overall has not reached its pre-corona impact high, as in February 19th is one of the markers used. Stocks have been climbing steadily in recent weeks, and it's believed because we're looking at an improving situation and starting to reopen the economy. And as we start to talk about that and look for other hopeful signs, and as we said, there are some good signs with some retailers doing pretty well, and then of course the impact of the stimulus package, the Payroll Protection Act program. Some businesses and those in government also are looking at reactions of what's happening in Europe and in China in terms of some businesses starting to reopen. So those are sort of our test cases that we can learn from. And recently there was an article that I saw that Volkswagen, Daimler, and Volvo were reopening their factories in Europe. And of course it is among some skepticism about whether or not it's the right time and will workers be adequately prepared and protected. But they have already restarted limited production at some parts factories. And now Volkswagen is reopening car assembly plants in Zwickau, Germany. I'm not sure if I said that correctly. And Bratislava, Slovakia. Other VW factories around the world will follow later in April and in May. Daimler, the maker of Mercedes-Benz cars and trucks, said that it would reopen 3 German manufacturing factories, and they would be manufacturing vital parts, such as a system made in Berlin that controls the valves of internal combustion engines. The plants will initially operate for 1 shift a day as Daimler gradually restarts operations in Germany. Volvo will reopen its factories and offices in Sweden. Sweden has taken a more relaxed approach to the virus, allowing grade schools and restaurants to remain open. That's been a point of contention among other countries, is Sweden's approach to the coronavirus. But to put this in perspective, more than 1 million Europeans are either working reduced hours or are unemployed because of car and parts factory shutdowns. So restarting the plants would be crucial in getting them working again. But the factories will also be laboratories of whether the risk of infection can be controlled by use of face masks, plastic barriers, and other measures. There's no mention about testing, mandatory testing or temperature checking with employees at those plants when they return to work. And that is something, of course, that has come up among some American businesses as they look at what standards or measures would need to be in place for them to bring back their workers, particularly those in an assembly line or a setting where they'd be working closer together. Testing, of course, has become a big and central theme for not only businesses but in government plans to look at restarting the economy again. There is some progress that's being made, of course, in testing, making it more available. There's a 10-minute test, apparently. I'm not sure if that was approved or not. But there are advancements being made every day to be able to have a quicker test, a test that could be self-administered and that could be widely produced and available. So we'll see what happens with that, and that will definitely be a game changer for many businesses. But for now, this country and our businesses, we're looking at some of these test cases, as I said, in Europe to see how they do, how workers respond. And, consequently our sales and the amount of orders that they have, is that going to remain the same to sustain them working there? We're also, of course, looking very closely at what's happening in China, and they have started reopening. They've been doing that now for a few weeks since Corona has largely been under control there. Now, in looking at China, we look at how their economy is doing and what kind of hit it's taken from Corona, and then again how they're restarting businesses. And of course, the problem is they don't report their economic factors the same way that we do, or make them widely available. For more than 4 decades, China has never acknowledged that its economy actually shrank, even during major economic crises. So, but indicators right now suggest that they have, of course, suffered a major impact because of the coronavirus. I don't see how they couldn't. In the first 2 months of the year, compared with the same time in 2019, China's investment and domestic production suffered record double-digit drops, according to a report that I saw. One report, based on a survey of 18 Chinese and foreign institutions, said that they forecasted that the economy was anywhere from flat to down 11.5% in the first quarter. The average forecast was for a drop of 6.6%. Another survey by Reuters of 57 analysts found even bigger range of predictions, and they see anywhere from a nosedive of 28.9% to a gain of 4%. So it's a pretty wide range. So we're going to take another commercial break, and when we come back, we're going to shift gears a little bit, and we're going to talk about the airlines and what their reaction is to the details on the payroll protection program.
Tired of searching the vast jungle of podcasts? Now listen close and hear this out. There's a podcast network that covers just about everything that you've been searching. Hey! The Golden State Media Concepts Podcast Network is here. Nothing less than a podcast bliss with endless hours of podcast coverage. From news, sports, music, fashion, cooking, entertainment, fantasy, football, and so much more. So stop lurking around and go straight out to the Golden State Media Concepts Podcast Network. Guaranteed to fill that podcast itch. Whatever it may be. Visit us at www.gsmcpodcast.com. Follow us on Facebook and Twitter, and download us on iTunes, SoundCloud, and Google Play.
Hi, I'm back, and as I mentioned, we're going to talk about the airline industry. I had talked in a previous podcast about the fact that the Trump administration had told the airlines that it was going to come out with the terms of the aid that it would provide to the industry, and they were supposed to work that out last weekend. Well, they did finally work it out, or at least communicate it to the airlines. And I guess, they will receive a pretty decent size bailout. However, it does come with a price. And as some fear, it may not be enough to actually save them. I don't know whether it's fair to expect it to or not. But either way, they have taken a pretty devastating hit since the pandemic occurred, despite whatever problems that they may have had before the pandemic hit and travel restrictions were placed. The Treasury Department had said on Tuesday that it struck an agreement with the 10 major airlines to distribute $25 billion in payroll assistance, and that was part of the $2.2 trillion federal stimulus package that was communicated last month in March. The money is to be used by the airlines to keep their employees working at least until October. So they will not be able to furlough or lay off employees during that time if they are going to receive this money. The money will also give the Treasury Department a stake in the airline's future. So, for instance, it could be up to 12% in American Airlines, which is the biggest carrier. The issue is that, as I said, they can't furlough anyone until October. And while this package may help them keep their employees working, it's not expected to vastly improve the different airline situations coming the fall. You know, whether or not they will ever rebound from this lack of travel right now. One of the statistics that I saw said that since people have been ordered to shelter at home and not travel, that overall demand has been down by 95%. And of course, the planes that are still flying are finding that their cabins are largely empty. So that, of course, will change once the travel bans are lifted, whenever that will be. However, you know, we'll also see consumer behavior playing a part with people and their comfort level to travel again. So it's not likely going to rebound completely before the fall, just again because of people's confidence in traveling again. But this package, of course, is aimed at giving them that boost and keeping them still vital and keeping their employees working and during this time, and hopefully we'll see that resurgence. Among those airlines that are warning that they may in fact have to make those cuts later in the fall are Delta Airlines and United Airlines. They both have said that. United just recently said that it will fly just 10% of what it had originally planned for May and is planning a similarly bare-bones schedule in June. They're seeing that the stark reality of the situation is beyond what they feel the stimulus legislation can address. The International Air Transport Association had forecast that airlines around the world would lose $314 billion in revenue this year, which is a 55% drop from 2019. Despite the stimulus checks, it's expected that paychecks will likely still be smaller for many workers, including pilots and flight attendants, who won't be paid above the minimum levels in their contracts. Airlines have been encouraging employees to take unpaid leave or early retirement to help cut costs and stretch the government funds. And apparently there have been thousands that have volunteered to do that. The government aid, by the way, does come with a price. It's not completely free. Airlines have to repay about 30% of the funds, which they hadn't originally expected. And that's at a time when the airlines are already taking on billions of dollars of additional debt through credit lines and other methods. Some airlines and analysts pointed out that the funds cover only about 3/4 of carriers' labor costs. American Airlines is the first carrier to confirm it will go ahead with an application for the $4.75 billion government loan. And that's from a separate $25 billion program in the stimulus. American has said that it would issue warrants to purchase an additional 38 million shares to the Treasury for that loan. And that's in addition to collateral that hasn't yet been determined. Overall, the loan amounts will be determined by airline capacity, including international flying with aircraft, spare parts, routes, and loyalty programs could be potential forms of collateral. The government will wind up with small stakes in the largest airlines, about 0.5% of Southwest and 1% of Delta, if it chooses to exercise warrants the airlines are offering. The warrants give the government the right to purchase a certain amount of shares at last week's prices. In addition to the requirements of that come along with taking the federal funding, airlines will be expected to continue with their existing flight routes in their networks. And that could mean sometimes flying nearly empty airplanes to places that really just don't make a lot of sense for the airlines, or they'll end up losing more money. Still, there is this incentive that's offered out there, and hopefully that will bring some relief to the industry while it looks for other ways that it may rebound from this economic crisis. So we're going to pause once again for another commercial break, and when we come back, we're going to talk about Amazon and online buying. So please join me.
Are you tired of the same old news? Are you sick of the seemingly endless political spin and negativity? The GSMC America's Still Beautiful podcast is a weekly news podcast covering all the top positive and uplifting news stories. We cover stories that will inspire, uplift, and remind you of the good in the world. Tune into the Golden State Media Concepts America's Still Beautiful podcast to get all the great and positive news stories of today. Download the GSMC America's Still Beautiful podcast on iTunes, Stitcher, SoundCloud, Google Play, or anywhere you find podcasts. Just type GSMC in the search bar.
Hi, I'm back, and we're talking about Amazon, and, it seems like we can't get by a newscast or a podcast without talking about Amazon. They seem to be constantly in the headlines, largely for positive reasons. I will say that it makes me a little sad, actually, that I haven't been able to use Amazon the way that I had. I mean, this seems like perfect timing. Right now we have nothing but time, and it could really get out of hand with doing a lot of shopping, and I would like to be one of those people doing that, but it's not in the cards. It hasn't been in the cards because Amazon has had to limit the transactions and the sales that it does in order to facilitate meeting the essentials demands or the demand for essentials. Which, by the way, I learned that apparently Easter candy and chocolate are not essentials. I had real trouble trying to get something delivered last week, so yeah, it's a bummer, but, it would seem a missed opportunity, but in fact, they've been meeting a much more important demand, and they've been able to do that because, as they had promised, they had to hire 100,000 workers, additional workers, to be able to support this. And in fact, recently has said that they will probably have to hire another 75,000 workers to do this. But they have also come out with some recent news. What they're doing is looking at reconfiguring their system in order to adjust to the volume of sales that they've had for items related to the pandemic. It's retooling the system, and actually they're going to be doing something that's kind of the opposite of what it had built itself on, and that is to actually sell fewer items. So if you've gone on the site recently, you'll notice it does seem a little different. They're not constantly, barraging you with "you might also like" kind of a thing. They said that Amazon said that they began hiding most of its popular recommendation widgets that show shoppers what other people have bought or similar items in the basket. They have already limited that. And by the way, I don't have to tell you this likely, but Amazon is the largest online retailer in this country. And in fact, 1/3 of all online shopping in the United States is on Amazon, just in case you didn't know. Because they have taken different steps and are continuing to take different steps in looking at their system and how it works in order to reduce their sales, in order to focus on the essentials sales and getting those delivered. They have done things like cut some of their advertising spending. Among the ad spending cuts that they are making have been or with Google search engines. So, a lot of those pop-ups that you get or advertising that you'd see in other places that comes through Google has been pretty much been down to nothing right now with Amazon. Now, the good news is, if you're like me and you need your fix, or you haven't had your fix of Amazon sales lately, they are going to be allowing their third-party sellers to start using the system again and selling on Amazon. Third-party sellers account for 58% of the sales on Amazon. The company is set to allow shipments of other products again after hiring that additional 100,000 workers and announcing the 75,000 more. The new employees were a factor in the company's decision to begin facilitating sales of non-essential items once again. Amazon plans to spend nearly $500 million on increased pay for warehouse and delivery workers. That's another news story that we've seen recently. Some complaints from the warehouse workers about the conditions and the fact that they should get increased pay and that there should be more protective measures taken there in the warehouses where they work closer together. Another thing that Amazon is doing or considering doing is changing their Prime Day. That's the day that they would set up. Typically it's been in July. They've only been doing this, I think, since 2015. But in July they would have a Prime Day where anyone who was a Prime member could take advantage of a lot of deep discounted items and, of course, have the free shipping according to how much you're going to buy and if it's a Prime product. But it's a big day in terms of the company and those who are members of it, and that has been pushed to August. And I believe at that time they expect that there's going to be quite a large inventory of products that they haven't been able to sell so far, both by choice and because of availability. But there should be a number of products, particularly electronic products, that will end up becoming very deeply discounted because of this. So it could be a really good thing to happen in August. Related to that, which I don't think is such a great thing, but, who am I to say, is apparently they're talking about not pushing or doing any advertising or banner ads about Mother's Day and Father's Day. But let's just talk about that for a second. Mother's Day, really? I mean, let's face it, for those of us who are moms, our kids use Amazon. That's a good way to let them know what we want and to remind them that, they do need to get a gift. And even for those of us who buy for our moms, it's a good reminder too. In fact, it's always a way for me to figure out what I want when I'm shopping for what I want to get someone else. So anyway, it's kind of a bummer, but and just to say that, I don't care that the economy is not good and people don't have jobs. Let's still remember Mother's Day, especially now, in fact. Doesn't mean you have to go get something really expensive or you have to use Amazon to get it. But, I think we need to take whatever opportunities we can to reinforce our love for the people in our lives and those relationships, even if it is a Hallmark holiday, as some people will say. But nonetheless, I think, Amazon is stepping up to what's needed at this time and not focusing so much on commercial gain as they are in fulfilling needs of essential items. And of course, that's what's really important right now. So we're going to take another commercial break. And when we come back, we're going to talk about technology and what are some of the essential things that we found are needed right now during this crisis, and how perhaps is the industry responding to that need that we have right now. So we'll be back in just a moment.
The Golden State Media Concepts Travel Podcast, the show that gives you advice on everything travel. We explore places you've always wanted to go, as well as giving tips for traveling in those places. We'll give you advice on the best sites for travel tips, information, and discounts. Join us as we travel the world, explore cultures, and meet new people. The Golden State Media Concepts Travel Podcast has got you covered. Download the GSMC Travel Podcast on iTunes, Stitcher, SoundCloud, Google Play, or anywhere you find podcasts. Just type GSMC in the search bar.
Hi, I'm back. And in this last segment, I want to talk about technology and what have become important devices and apps and tools during this pandemic. Now, you might wonder, what's the point talking now? Hopefully, we're on the back end of this and we're coming out of it. And if we didn't have the right tools with us so far, we're probably already sunk. But I think, for some people in maybe evaluating what they should upgrade, what they should invest in right now, we don't know how much longer we're going to need to stay at home. It could be a bit longer. And work-wise, we may be sheltered at home longer too. That's going to vary by the companies that we work for and other factors. So there still is a need, I think, to look at what are some of the essential devices that we'll need for continuing to stay at home and also to stay sane. So you could break down the essential items needed, technology items needed at home, into 4 categories. Computing devices, that's your computer, your iPad, Surface Pro, whatever device that will help you with actually doing work. Then there's communications tools, and that would mean not only apps that help you have business meetings online, but also connecting socially and in other ways, connecting with schools and other communities that you might be a part of. Entertainment. Can't be without entertainment. We need a break, right? Something to lift us out of all this misery, maybe just for a moment. And then the other essential item that really is the foundation for all of these is the internet connection and the routers that we use and how effective they are. So in talking about the computing devices, as I mentioned, laptops and iPads, but your smartphone is really probably the biggest element of all of that. When all else fails, you have your smartphone. And, people are listening a lot to the hype about 5G and having the latest and greatest with that. And right now, that may not be that essential. I mean, it's a nice to have, but it's not key if you have a basic, well-working smartphone. And in fact, just today, I believe, Apple announced its new iPhone, the iPhone SE, which is kind of a remake of the SE that was around before. It is supposed to be $399, and it's considered to be the most affordable iPhone that Apple has ever released. Apparently, it looks almost exactly like the iPhone 8 and has the traditional home button, unlike the newer models that don't have that button on there. You have to swipe up to get it. It pretty much offers all that you need. It's not huge like, some of the later models of iPhones that have that are very large screens. As I said, it does look like the iPhone 8. And they will start taking orders, I believe, this week. And they're supposed to start to ship April 24th. So something to consider. And it's a good tool. Anybody who's had an iPhone knows, that they're a pretty quality product. But of course, there are other great products out there, the Samsung products as well. So, you make that call as to whether or not you need a new smartphone. But if ever there was a time and a need for one, now is it. It's funny, though. I saw a report not long ago saying that since we've been sheltered in place, that the mobile phone use has been down actually a little bit from previous time, because more people are able to use a laptop at home and be able to look at the same apps and do the same things that they could do on their smartphone. Particularly if you're looking at entertainment, it's so much easier to look at it on a bigger screen. And we got so used to having to squint and look at the phone screens that when we realized that we could just, sit back in a chair and look at a laptop and get a bigger, broader picture, it was like, oh, okay, yeah, that's right. That's what those were designed for initially. So laptops are a good way to go in terms of those essential computing devices. And you can get one for, I think a few $100s on the low end. But of course, they go up from there. And who knows, like I said before, if Amazon has this huge inventory come August, those who are Prime members might be able to get a really good deal. However, at that point, hopefully the urgency for having a home office won't be as big as it is now. So there are those considerations there. In terms of communications tools, by now pretty much everyone's heard of Zoom, I would think. Zoom, the video conference tool. And it's, obviously being widely used right now. But there are other competitors who have had products out. There's other ways to communicate via video conferencing. Google Hangouts, FaceTime if you have an Apple device, Blue Jeans. There are a number of them. But you're going to need to have access to them. You're going to need to have some of the basic ones on your phone or on your laptop. And chances are you already do. And of course, when it comes to entertainment, it would be hard to survive this, personally speaking, without at least one streaming service. Whether you use Hulu, Netflix, Amazon, Apple, Disney, any of these streaming devices, it's pretty important. And I guess you know it's times like this that you figure out which ones are really of value for you if you can't buy them all. But I guess underpinning all of that is having a solid internet connection. And there's some things we can do about that and some we can't, because we're on the internet with the rest of the world right now. But one of the obvious things to look at that you do have some control over is your modem, your router. How current is it? What's the capacity like on it? If you're not sure, you should probably look it up and see, how old yours is, because chances are there's a newer version that would give you better and more reliable internet service. One last thing that sort of relates to all this, I wouldn't say it's an essential, at least for me, but I do know there are a lot of Pokemon Go fans out there. Right now, I guess fans might be calling it Pokemon Stay Put, because, the game is based on you actually being mobile and capturing the Pokemon's, Pokies, whatever they're called, catching them, in different locations. So since we're staying put, social distancing, that game has not had a lot of play. However, the company that created the game, Niantic, they have said that they're working on a change to the system where they will have raid battles that will be accessible remotely. So the company is adding a new item called a remote raid pass to the in-game store, letting you play raids that appear on the app's map or quote-unquote nearby page without leaving to go to the physical location. So there you go. There's some hope for you in catching your Pokemon, and we do need the world to be a safer place, so please do go out and get them. Virtually, that is. Well, that does it for today's podcast. I hope that you've learned something or maybe heard a different perspective on it. If you have any comments, I ask that you please note them on our Facebook page, or you can even tweet on our Twitter. So please leave us comments, let us know what you think, and join us for the next podcast. Again, I'm Paula DuPont, and thank you for joining the GSMC Business News Podcast.
You've been listening to the GSMC Financial News Podcast, part of the GSMC Podcast Network. You can find this show and others like it at www.gsmcpodcast.com. Download our podcasts on Apple Podcasts, Stitcher, SoundCloud, and Google Play. Just type GSMC into your favorite podcast app to find all of the shows from the GSMC Podcast Network. From movies to music, from sports to entertainment, from business news to weird news. Please subscribe to the podcast and follow us on Twitter and Facebook. Thank you, and we hope you've enjoyed today's podcast.